Hello everyone. Welcome to episode 2 of CRT 2026 Mentorship. And so let's not waste time or get caught up in any unnecessary talk. We are going straight into today's topic. This lecture is all about lower time frame methodology, and trust me, it will be 100% more valuable than the paid mentorship you see from Twitter gurus. We are going to break it down step by step, from how to approach lower time frame entry to understand entry models and how to align them with the bigger picture. By the end of this episode, you will have a clear framework of recognizing and executing entries on a lower time frame. So without wasting much of your time, let's dive into the chart. What is our topic today? From the previous episode, I taught you guys about CRT and how to spot CRT, and also we touched on different type of CRT. So today I'm going to be teaching you guys on CRT and the Model 1 entry confirmation. So this is a particular system that I used to trade up until now, and this entry confirmation is simply known as the Model 1. I don't trade breaker block. I don't trade change in the state of delivery. I only trade Model 1. This is the only model that works for me. So as you stay tuned and relax, you are going to understand how to trade using this Model 1. And also, we are going to touch on time frame alignment. When trading CRT, there are different time frame where we plot out our CRT, and these time frames have their time frame of entry to get your confirmation. You don't just take any trade randomly and try to take a particular entry confirmation, probably using the Model 1 on another time frame that is not suitable for it. That is why CRT is very, very exceptional. So let's looking at this time frame alignment, we have the weekly time frame, which is the higher time frame. So whenever we see or spot our CRT on the weekly time frame, we are expected to go down to the daily time frame to look for our Model 1 entry confirmation, which I'm going to be teaching right on the chart. So when you spot your daily CRT on the daily time frame, we are going to go straight to the 1 hour time frame and look for our entry Model 1. So if our CRT was gotten on the 4 hour time frame, we are going to go straight to the 15 minute time frame and look for our entry confirmation, which is our Model 1. The same thing happens on the 1 hour. When we get our CRT on the 1 hour, we are going to go straight to the 5 minute time frame and get our Model 1. So there is something important about this. When you understand time frame alignment with price action and also time and price, when you take trade in a particular time, because in this trading I take trades during the London section, and also I take trade during the New York section. So these are the most active period in the forex market, whereby there are a lot of volatility in the market, and buyers and sellers are more stronger during this period. So understanding time and price is more vital when trading CRT. Now let's go into the chart as I proceed. So this is a CRT candle example, as I stated earlier yesterday, or rather on the previous episode that I dropped, which is the first episode of this 2026 mentorship. We touched on different type of CRT, and I talked about the classic CRT, the two candle CRT, and also the multiple candle CRT. So looking at this CRT, this is on the 4 hour time frame, which is the time frame for framing the CRT and also getting the context. So not only taking of knowing how to find the CRT as well, you are going to know how to plot the confirmation to take exceptional trades. So this is a classic CRT here. This is a classic CRT here. You can see that price cleared liquidity above this candle range high, then immediately price traded into the bearish order block, which is also a key level. And you can see after price tapped into the key level, price rejected inside the range, showing us that this CRT is closing inside and is going to be valid for us to take good trades. So when taking a trade like this during a particular time, you want to make sure that this candle range high here is formed during a particular time. On my next episode, I'm going to teach you guys on when to catch a particular CRT, because time and price is very, very important. So we have the key times, New York Q zone time. We look at the market to see if we are going to trade or not. When it is there, you will see that it is there, and if it is not there, you will see that it is not there. That is why this strategy is exceptional. It's just it is not just like pattern trading, whereby you go into the trade and you are waiting for a market structure shift to form, and at the end of the day nothing forms. So this is a particular key level here, and this particular sweep happened during a key time. Now we have what we call the classic CRT time, which is the 1 a.m. CRT. We have the 1 a.m. CRT, and also we have the 5 a.m. CRT, and also we have we have the 9 a.m. CRT, and this CRT occur during the New York Q zone. This CRT always occur during London Open, and also during New York Open. So these are the three time we look at the market to see if we are going to take a very, very exceptional trade. So we have the classic 1 a.m. CRT. We also have the 5 a.m. CRT, and we also have the 9 a.m. CRT. So these times are New York time. So when you want to trade it, you are going to set your trading view on New York time UTC -4. This is the New York time, and this is how we trade this particular Q zone. Now looking at this diagram here, this is a classic two candle CRT that formed around this area. You can see that this first candle formed the range. The second candle came, took out the high of the first candle, but didn't work. Why didn't this price work? Because you will see that the next candle came in and took out that candle. This candle was not valid. Why? Because it didn't trade into a key level, which is this order block resting above it. But what happened? At a particular time, or at a particular Q zone time, price tapped into the key level. This is around 1 a.m., which is the 1 a.m. CRT, which is the beginning of the range. Now, at 1 a.m., price cleared this high, tapped into the order block, then started distributing to the downside. This is how to take trade using um, time and price. Now let's go down to the lower time frame to let me teach you guys how to trade using our Model-1 entry confirmation. Now this particular CRT formed during the London section, during the late hour of Asian section by 1 a.m. We are expected that price is going to take out the high of the 9 p.m. during Asian section. Then price is going to trade into a key level, and that is what happened around this area. Price cleared the high of the 9 p.m. and also the 5 p.m., creating a CRT high, then tapped into our order block, and it started displacing to the downside. And remember, I said that time frame alignment is very, very important. Now we got our CRT on the 4-hour time frame. Now we are now going to go down to the 15-minute time frame to frame our Model-1 entry confirmation. Now on the 15 minutes time frame, the setup is going to look more clearer to you guys. You are going to understand it more better. Now looking at this candle from the 15 minutes time frame, looking at this trade from the 15 minutes time frame, you can see that price traded into our key level from the higher time frame. And the moment price traded into the key level, we are expected that we are going to take our trade using the Model-1 entry confirmation. Now, before taking this trade, we are expected to see that the candle that purged liquidity, the buy candle that purged liquidity, is our Model-1. So from this confirmation, we have this bullish candle. This is the bullish candle that purged this particular CRT high. You can see clearly that this candle purged this CRT high and was engulfed by a bearish candle. So you are going to mark it out around here bring it out. This is called our Model 1 entry confirmation. And this is where you are going to take your trade using the Model 1 entry confirmation. So Model 1 is simply the buy candle that engulfed when a CRT is purged and price closed inside the range as a context on the higher time frame, or rather the intermediate time frame. We are going to drop down to the lower time frame that is best aligned. Now looking at this, on the 4-hour time frame, price tapped or rather swept liquidity around this area from the 4-hour time frame, traded into our FVG. So the moment price tapped into that FVG, which is a key level, the bullish candle that was engulfed, now price was bullish, showing the bullish candle and showing the bullish momentum. So the moment price tapped into the key level, it was engulfed by this bearish candle. So this bearish candle closed below the bullish candle, and a Model 1 is said to be when we are bearish, the bullish candle is definitely going to be engulfed. So price tapped into this key level uh, with this bullish candle. So when the bullish candle is engulfed, it is known as our Model 1, and this is the only confirmation that I use to take trade. If I didn't see my Model 1 entry confirmation, I am not going to take that trade because what? Because the confirmation is not valid. So when you see something like this, price swept liquidity tapping into the key level and have been engulfed and was engulfed by the opposing candle, it is called a Model 1. The same thing is applicable on a bullish market. So when you see something like this, we are going to take the trade from here. When price comes back to the Model 1, we are going to take our trade from here, and we are going to target the opposing liquidity. As you can see from here, we have a resting draw on liquidity around this area. So this is how to take trade using a Model 1. And you can see how marvelously this candle displaced immediately, targeting our key level. So this was the trade I took, and I shared it with some of my community guys. Now let's look for another example of Model 1. Now, this is another example for Model 1. So this candle traded into a key level. You see, we have our key level marked out around this area. So this is a higher time frame key level, which was where we got our context. Context, when I mean context, I mean CRT, where we were able to mark out our CRT. You can see that price cleared the high of the CRT, making it a liquidity purge, or you can also call it a liquidity sweep. So the moment price cleared the high of this liquidity, it is going to close inside the range on the higher time frame. But on the lower time frame of alignment, you are going to see a Model 1 formed around that area. The candle that purged the liquidity and traded into a key level is our Model 1. You can also call it an order block, because the work is the work of an order block. When I mean order block, I don't mean ICT order block, I mean CRT order block. The order block that cleared liquidity, traded into the key level, then when it is marked out, is called our Model 1. So we are going to add this as our Model 1. So price is going to come back and tap into the candle, using it as our order block to displace to the opposing direction. So price, after closing below the candle, after breaking below the candle that purged or rather swept the liquidity, price later came back and tapped the Model 1. Then the moment price tap the Model 1, we are taking the trade immediately, and we are targeting the opposite side of the liquidity. So this is how price tapped into this Model 1 and started displacing to the downside. So taking your trade from the Model 1, your stop loss is definitely going to be at the high, at your protected high, and we are going to target the candle range low and also the residing draw on liquidity resting below or above. This same thing is applicable on a bullish CRT. Now let's look for another CRT. Now looking at this trade happened last week. This was the second trade I took, and it was a profitable trade. This trade was taken last week. So this was a CRT that formed on the higher time frame, and immediately that CRT formed, remember I said key level, and my on my first episode I said that, and I also stated that we have old highs and old lows, and those old highs and old lows are resting liquidity. Now this is an old high from the high, an old low from the higher time frame. The moment this old low was taken out, the moment this old low was taken out, you can see that price came back and swept liquidity, creating a model 1 for us. And this is how I caught the trade last week. So this was the candle that cleared liquidity, which is our candle range low. When you mark your candle range low from the higher time frame, you mark your candle range high also from the higher time frame, and you can also mark the deciding draw on liquidity resting above or below after you have gotten your CRT. Now, looking at this candle, this was the candle that purged liquidity. This was the candle that purged liquidity at a particular time. Remember, time and price. We took this trade during a key zone hour. This is during the 5 a.m. London open. Price came and cleared liquidity with this bearish candle. So we are going to this bearish candle is going to be a powerful model 1 if it is engulfed by a bullish candle. And looking closely, you can see that price came after it swept liquidity. Price came and closed the candle, and marking it out is our bullish model 1 entry confirmation. So this is when you are going to take your trade from the model 1, and your entry is going to be from this area, and your stop loss is going to be below the protected low, and we are going to target the candle range high as our first TP, and subsequently we can still um expand it also to a deciding draw on liquidity. So looking at this, you can see that price delivered up until resting buy side liquidity, because liquidity is enough in this market. We have a lot of liquidity resting above and below the high and the low of price. So this is how to take this trade. And remember, all these trades are taken at a particular time, which I'm going to teach you guys on my next video, when to catch the model 1 and also the CRT, the particular time to take trade using the model 1, and also the key time, which is the 159 as I stated earlier. I'm going to teach you guys on episode 3 how to take trade using the 159 Q zone, so that you guys are going to understand it. And I'm going to open a Telegram channel whereby I'm going to be sending you guys trade signal and make money also with me, while I teach you guys in the process of learning CRT, and also giving you the holy grail strategy that make me profitable all this while. So another example here is this trade we took. This is a trade we took some time ago, and this trade was taken during the 5 a.m. CRT. So time and price is very, very valid. If you are taking a trade in a wrong time, it is not going to work. Why? Because the trade is not well predefined. Time and price based narrative. If not, you are gambling. Whenever you are taking trade outside the particular time, the New York time or the London time, which is the 1 a.m. CRT, the 5 a.m. CRT, and also the 9 a.m. CRT, which is also explaining the accumulation, manipulation, and distribution phase. When you are not taking trade around this time, you are obviously gambling in the market, and price is going to whip your ass. Now, this is a candle range theory. Price cleared the high, the low of this candle, because going down to the 4-hour time frame, you are going to see that this candle was cleared from the higher time frame. You are going to see that price cleared this candle, giving us a candle range sweep around this area. Zooming in, you will see that we have a candle range theory that tapped into a key level here. This is the candle range low and also the candle range high. Price came and traded into the candle range low, this is during the Q zone hour. If you can look closely, you can see that this trade was taken during the 1 a.m. classic CRT New York time. So price took out the low of the 5 p.m., the 9 p.m., and the 1 p.m. lows. During the London time, price close below it, sweeping the liquidity. And this is an example of of a classic CRT that I taught on my episode 1, where we have three candle acting as a CRT, whereby the first candle is a range, then the second candle is a manipulation candle, which is going to sweep liquidity and also create the liquidity purge. Then the third candle is the distribution candle, and you can see how price swept liquidity immediately, traded into a key level. This guy here is a key level. This is a wide range fair value gap on the higher time frame. Price tapped into this key level, and on the 1 a.m. we swept liquidity. Then on the 9 p.m. we distributed. Most times it is not going to be as easy to predict, but once you stay with me and be in the market for some time while I proceed, I'm going to teach you guys how to take trade very well using the time and price narrative. So this is a particular context on a 4-hour time frame. This time frame is not a time frame to take trade. We cannot come and start executing our trade around this area. We are going to go down and use a model 1 entry confirmation to take the trade. Now this trade tapped into this guy. Immediately the 9 a.m. candle closed and targeted the candle range high, and even moved further to target the other draw on liquidity resting above. And this is how the trade went. So let us go to the 15 minutes time frame, and let me show you how the model 1 was taken around that time. So this was the candle range here. This was the example that I stated earlier. Please kindly pay attention and make sure you write down the list of everything I'm teaching you guys, because this is not a random teaching. You cannot see it anywhere, because I just started this academy to enlighten students. That is why I would like you guys to pay close attention to this and make sure you benefit from this while we proceed. Now, price cleared the low of this CRT. Then this was the candle that purged liquidity. Remember, we may have like about three candles that sweep the liquidity, but the most important candle here is the one that clear liquidity. Now looking at this candle was the one that cleared liquidity around here. This candle is supposed to be our model 1. So there are other ways you can take trade using a model 1. You can use the wick, and also you can use the body of the model 1. If the body of the model 1 is very big enough, you can use the wick. But if the body is too small and the wick is very large, you can consider using the wick. But looking at this particular example, the body of the candle is too big. So this was the candle that purged the liquidity. So we can use this guy here and take the trade, or you can also use this area and take the trade. But let us put it at the wick here. This is how we are supposed to take the trade from this guy. But I took my trade here because I understood what price is trying to do around that area. So this was what happened, and this was how I took the trade as my model 1 entry. So the moment price came back and tapped into the model 1, I was holding this trade for a long period of time. And you can see how price came and tap into the key level. Then our stop loss is going to be on the protected low. Why is it a protected low? It is a protected low because it swept liquidity and it gave us our confirmatory signature, which is the model 1. And whenever liquidity is taken, price is not definitely going to come back to sweep you out. Instead, price is going to target the opposing liquidity. This is how the algorithm is built, and this is how the particular entry confirmation is going to work. It is not like pattern trading where you wait for market structure shift, and for like 2 to 3 hours price is still dilly-dallying around that key level. This model 1 is actually very, very fast, that whenever price taps into the key level, it targets the opposing draw on liquidity. So this is how to frame this trade. So all right, this is it for episode 2. Study this example thoroughly, take proper notes, and practice this trade, spotting the sequence on your own. And on my next episode, I'm going to be teaching you guys time and price, how to look for the 1 a.m. CRT, the 5 a.m. CRT, and also the 9 a.m. CRT to frame a trade idea. Thank you for watching and kindly subscribe to my YouTube channel. Let's grow together, guys.